Hey everyone, my name is Robbie and welcome to Robbie in Manila. Today we're talking about the Robinhood app. I mean, this is a good video. This is an important one. This should be a popular one. I'm hoping a lot of people watch this one because a lot of people are really interested in this app. They're trying to learn about the app. They're trying to figure out how to invest. And so that's what we're going over today. We're gonna start with opening an account and then we're gonna talk about how to use the app, finding stocks. Basically, let's try to figure out how to master the Robinhood app. And let's go ahead and get started right now. Okay everyone, so let's get right into it and let's download this app. Now, you don't have to do this, but I'm just gonna let you know, if you want to support me, if you want to support Robbie in Manila, then there's a little link in the description below. It actually helps me if you click the link and you open up the app and sign up through that link. If you don't want to support me, ouch. Just kidding. It's okay if you don't want to support me, but go ahead, just find it in the App Store if you don't want to support me. And I'm gonna wait for you to go ahead, find the app, download it, and then let's go from there. Okay, so what we're gonna do is you're gonna just go ahead. I'm gonna go through this pretty quickly, so you're gonna say where you're from. What's your email address? You're gonna put that in there. Then you're gonna go from the email address, you're gonna create your password. Then after your password, add all your legal information, your legal name. You're gonna wanna put your phone number in there. You're gonna wanna put your date of birth. This is all very important stuff that they really need to know, so make sure you add it correctly. It'll be verified. And then you wanna add your mailing address, your actually residential address. And then you're gonna wanna verify your identity. So you're gonna wanna use a social security number to verify who you are. There's no impact on your credit score or anything like that. Just make sure that you know that. So don't worry if that's a concern of yours. There's no worries there. So type in your social. I'm gonna blur it out because I don't want you to see my social security number. Okay. Next up, you're gonna see how much investment experience do you have. If you're new to investing, just put none. Maybe you've bought a few stocks before, maybe you're not much. I know what I'm doing. I'm an expert. So you'll know what that is. Just some info on free options trading. Then it asks if you're employed. So are you employed, unemployed, are you retired, are you a student? If you're self-employed, you can put that you're employed and then add self-employed. So then they're gonna ask you, are you or a family member a senior executive or 10% shareholder at a publicly traded company? So basically, you're gonna know the answer to this. Think about it. Is your parent or someone who's your close relative a senior executive at a publicly traded company? You'll know the answer. So if that's the case, you're gonna wanna add the information here. And likely it's not the case, so you can just go ahead and click no. Okay. So then you're gonna wanna fund your account. Now when it comes to this part, there's something you should know. So they use something called Plaid, and Plaid is something that links to your bank, hopefully. Now there's a possibility that it does not link to your bank. And so for me, I use a bank that actually, it wasn't linking correctly, so I couldn't get it to link. So what I'm doing is I'm actually going in and I'm typing in my bank, and then I'm gonna do what's called a micro deposit. So if for some reason your bank's not able to link here, you can do that. Unfortunately, that does take a couple days, so that might be something that you're gonna need to wait on. So for me, I can't speak today. So for me, I did the micro deposit, and so what happens is they put a couple deposits in your account, then you'll have to log back in later and verify those deposits so that they know it's your account. Okay everyone, so hopefully you're able to link your bank account. Now you're able to send money over to Robinhood. Of course, it takes some time for Robinhood to receive the money, so you're not probably gonna get it instantaneously. Might take a day, may take 2 days. But what we're gonna do in this review is, because we don't wanna wait, we wanna start learning how to use this app immediately. So now we're gonna start learning about what's going on in the app. So hopefully, by the time you have some money deposited, you'll be able to actually find some investments. So we'll start with the bottom left corner here. There's a little line chart, and then this is the main page when you open up your account. As you can see, my application's been under review for 7 weeks because I did not fund my account until just today. So hopefully now that will be approved, and then I'll be able to buy some stocks with Robinhood. So the first thing we want to see here is the lists. And so when it comes to stocks, what I want you to understand is that you can go ahead and you can actually click on one of these stocks. So let's go ahead, and everyone always clicks on Apple, so I'm not gonna do that. We're gonna go with something different than Apple. Let's go with Starbucks. Okay, so here we are on Starbucks, and as you can see, it's actually updating live because the market is now open. Now you might be wondering to yourself, why is the market open yet it's dark outside where this guy is living? And that's because this. That's right, I live in the Philippines, so right now it is almost 10 o'clock at night and the market's just opening in the US on the East Coast. So it's about 5 till 10 a.m. in the United States. There's a 12-hour time difference right now. Anyway, so I want to go through what we see here on Starbucks. Now, you're gonna see an updating chart, and so the first thing we see is that this is a 1-day chart. Now, what does that mean? That just means what has happened so far for the day. What have been the price increases and decreases for the day? Now, we can hit this 1W, which is the 1 week chart, and then we can see what's happened over the past 1 week period. And it's telling us that if you had bought this stock exactly 1 week ago today, at this very moment, you would be up $1.15, which is an equivalent of $1 and, well, it keeps changing, $1.62%. Can't talk today, sorry. Now, another interesting thing is that you'll see that this line is green. And that is because if you had bought 1 week ago, you would have a positive return. If you go to the 1 month, you'll see it turns red. Now, why does it turn red? Because you would actually be down if you had bought Starbucks exactly 1 month ago. You would be down $3.31, and that's down 4.26%. Okay, so you bought a week ago, you're up. You bought a month ago, you're down. And that's kind of the thing with the stock market. It's really not about trying to time the market. It's about trying to find something that you want to buy at the right price. A good company that you think is going to grow over time, that you might hold, and hopefully it makes money over time. That's what we're trying to do here. We're not trying to basically trade stocks unless you're into trading stocks. Now, I would actually caution you to use Robinhood for trading stocks. But if you're trying to buy stocks long-term, buy and hold type of investing, Robinhood, totally fine. Let's go to the 3 month. You can see it's green. I think you get the point. There's the 5 year, so you can see what Starbucks has done. Over the past 5 years, you're up 38%. So you've made $20 for every share of stock that you own. Pretty nice. Now, this very ending thing, this is something that you should know about, but you don't need to know about. And this is showing volume at the bottom. So volume is basically how many shares trade of Starbucks. And is volume important? Well, when you're a trader, it's very important. So traders would probably really want to know about the volume. As a long-term investor, someone who's probably gonna use this app when you're starting out, you don't need to know about volume. So I would just say, don't worry about the volume. It's fun to know, but I would say steer clear of that until you decide if you're gonna be maybe more of a trader. And if that's the case, then learn about volume. But when you start out, don't worry about it. Okay, let's go to the stats. Here we can see all the different stats, and let's go over these so you know what they all are. So the first thing is open. So that's what the stock opened at for the day today. The high for the day, so it opened at 74.01, and the high so far today is 74.60. Okay. The low for the day is 73.38. Okay. So it opened, it went down a bit, and it went up a bit, so it's fluctuating. That's what happens with stocks. The 52-week high, so how high did the stock get over the past 1 year period? Well, it's gotten as high as 99.72. And then what's the low for the 1 year period? It's gotten as low as 50.02. Now, what does that tell us? It just tells us where the stock is in the range of the whole year. It's kind of like right in the middle, in the 70s. So right in between kind of 50 and 100 almost. The volume is again, we kind of talked about volume. Do you really need to know about it? Probably not. But its volume is showing right now at 1 million trades. The average volume is 11.73. The market capitalization, so market cap's important. So market cap is how big the company is. If you were to buy all of the shares of Starbucks, how much would you have to spend to buy all the shares? And if you buy all the shares, by the way, you buy the whole company. That's the amount of money you would have to spend, $87 billion. So if you wanted to buy all of Starbucks, you have to spend $87 billion. That's the market cap of Starbucks. That's how big the company is. The PE ratio, it's actually a very important thing when you're starting out to learn some of these fundamentals. And PE ratio is a fundamental. Quick note what that is. A PE ratio stands for price to earnings ratio, the price of the stock divided by the earnings of that stock, basically. Specifically, the earnings per share of the stock. So this is a 26.17 PE ratio. Now, what does that tell you? It kind of tells you if a stock is a growth stock or a value stock. Not always, but it can be an indicator on whether or not it's a growth or value stock. So for example, Starbucks is 26.17. That's its PE ratio. Guess how much Netflix is, which is a growth stock. Netflix has a PE ratio like in the 90s. So a lot higher of a PE ratio than Starbucks. So Starbucks is not considered a growth stock in the way that Netflix is considered a growth stock, okay? Next is dividend yield. So stocks do pay dividends. Well, not all stocks pay dividends, but some do. And Starbucks happens to be paying a dividend, and dividend yield on this is 2.16. So if you're into dividend investing, at least you can see which stocks pay dividends and the yield that they are paying for their dividend. Now, next is news. So, okay, I just want to mention that Barron's is the best news publication when it comes to investing. I read Barron's. I have always loved Barron's. It's always been my favorite newspaper. It comes out once a week. I used to go to the Publix. I'm from Florida, which is our supermarket. I used to go to the Publix. I used to get my Barron's. I'd read my Barron's on Sunday. It's great. Now I'm here in Manila and I don't get the opportunity to go to a supermarket and buy Barron's. It's too bad. Anyway, if you're interested in Barron's, then take a look at the link in the description. It's an affiliate link, but highly suggest reading it. It'll help you start learning about stocks. And I do think that reading newspapers and staying up to date and basically getting a physical newspaper, in my opinion, it's like a great thing. But the affiliate link also has actual copy from the internet. So it's a digital copy, not necessarily always a print copy. Next up, Financial Post, Reuters, all these different things. Now, this is a very important thing I want to mention now. This is the analyst's rating of the stock. So analysts' ratings are important, I think, when you're starting out. So how deep down the rabbit hole you want to get when it comes to doing the analysis of stock investing is going to be up to you. So if you're the type of person who's going to start looking at all of the different income statements and balance sheets and statement of cash flows and really tearing apart what's going on with the company, okay, great, good for you. Maybe you don't care about what the analysts say because you're going to make your own analyst report, right? You're going to do it yourself. But for most people, they're not going to do that. They're going to try to rely on what the analysts are saying because it's actually a kind of good thing when you're starting to know what these people are saying. And so here, 39% of analysts, which are 33 analyst ratings, say that this stock is a buy. 61% of the analysts think it's a hold, but no one thinks it's a sell. So if this was skewed towards a sell, I might say that, okay, maybe be wary of the stock. But because it's mostly hold and quite a few buys, maybe the stock's okay to buy. And so that's kind of what it comes down to how you're going to decide whether or not you're going to buy a stock is looking at, I think when you start out, analyst ratings are important and they're right here in the Robinhood app. So I think you should take a look at them and hopefully they will help you. Next up, we have earnings. So earnings, this is the earnings per share. So every single share of stock of Starbucks, how much earnings does each share earn? So here you can see there's the expected, which is the less, but the more, what do you call that? The less dark green, the green that's more gray looking, okay. Less pigmented green. So the one with the less pigment is the expected earnings per share, what the analysts thought that this stock was going to declare as its earnings for the quarter. The other one is what the stock actually declared as earnings for the quarter. Now, what are earnings? Earnings are basically profits of the company. So earnings are very important, and earnings are what drives stock prices. So being sure that you buy stocks with positive earnings long into the future will help you buy stocks that are probably going to make you good money. So seeing here that the earnings have been a bit above estimates, not bad. Seeing that they are positive, that is good. And then of course in Q2 earnings were down a lot, but look at this. Earnings still coming in for Starbucks in a dire time period, because Starbucks basically has stayed open globally during the pandemic. So pretty great. Next up, let's take a look at the related lists. So when you talk about the related lists, I think that this is important. Actually, I want to come to this later, but we'll see this in a second, because we're going to go over the lists, because I think it's a good thing for us to talk about. There's also this, people also bought. When you start out, I think this is good. I think it's nice to see what other people buy that are similar to Starbucks. It gives you ideas, it can help you, right? Is it meaningful? Does it matter? Is it gonna help you find the right stocks? No. But it's good to help you start learning and understanding. So people who buy Starbucks tend to buy Disney, Coca-Cola, and Apple, Microsoft, Nike, McDonald's, the big companies, right? These big kind of companies that are in the S&P 500, some of them being in what's called the Dow Jones Industrial Average. So good to know, good to know. So when you hit a stock, when you're looking up the stock within Robinhood, there's quite a bit of information that can help you start understanding and get your wheels turning on whether or not you should buy the stock or not. Last thing here is just about Starbucks. So we know a lot about Starbucks, where its headquarters is, when it was founded, how many employees it has, so just some company information. You can also hit show more there if you want to. So if you don't know about the company, then that's always a good thing to know. And then next, let's go back. So we're gonna just scroll down a bit here, and we're gonna see real quick that it also says cryptos to watch. So do I care about cryptocurrency? I don't. I don't invest in it. I don't really care about it. I don't like it. Okay, if you like cryptos, if you're into it, that's fine. Totally good. So is this a place where you should buy cryptos? Well, from what I've read and understand about Robinhood with cryptocurrency, you can't really do much with it once it's in there. You have to sell it to get it out. You can't transfer it to a hardware wallet or whatever that thing is called. You crypto people will know more about this than I do. But anyway, Bitcoin is trading at 9,226. Okay, so there you go. That's everything on that first little, the bottom icon that looks like a chart. Next, we're gonna go to the little, the thing that looks like a debit card or a wallet. Actually, that's probably a wallet. Yep, it looks like a wallet. So this is cash management. When it comes to cash management, so rolling out soon is something that's called cash management. And so this is great about this is it's actually a higher it's actually a higher annual percentage rate that it pays than many other banks. So for example, 0.30% is how much interest you're gonna earn on this account. Think about that compared to a Bank of America, which I think pays like 0.1% right now, maybe even less than that. So the big brick and mortar banks are paying a lot less money in interest than these are. Now, will this happen going forward forever? It'll probably, they're really trying to compete, these robo-advisors, so I think Robinhood's gonna try to be as competitive as they can with these interest rates for a while. But is it the best interest rate right now? No, it's not. There are better interest rates. Ally Bank, for example, has a very high interest rate on, which it's like an online bank. It's not a brick and mortar bank like Bank of America either. So these companies that don't have as many assets and basically all of the overhead and things like that, they're trying to add a little incentive by giving you higher rates. And so Robinhood's trying to do that. Next up, there's FDIC insurance, which is very important. If something happens to Robinhood, if something happens to your money, it's insured, very important. There's ATMs, so if you want money to get money out, click learn more to kind of understand that. Now this is rolling out, it's not out yet, but it's coming. You know, to compare this real quick with like M1 Finance also has this available. A lot of the robo-advisors, Betterment, Wealthfront, they have this too. So basically Robinhood's joining the party on this one, per se. So it's good that they're having it, but it's not like they're trend setting on this. Anyway, on to the next thing. So, okay. Here on the browse page, after you hit the little magnifying glass, which is also, you know, the search tab, search icon, that's what you call it, search icon. Very center on the bottom there. Okay, we see popular lists, and this is a very important thing that I want to go over, but right before we do that, again, I want you to see that there's like news and things like that, top movers. So you have a bunch of things. Again, Barron's right there. Remember Barron's, the best news for investing. So let's go to the popular list. When we go to the popular lists, you have the 100 most popular, the top movers, the healthcare supplies, the cannabis, if you want to jump on that bandwagon, but you know, look, let me go on a tangent real quick. There's tons of stocks and there's tons of potential and there's tons of ways to make money in the stock market. Don't just think that one industry is going to be the one that makes you rich. Like, so cannabis is that industry for a lot of people. Just don't worry about it. There's all these great companies, all these potential, and look through all these companies. Try to find companies that make good products, that have good margins, that could have good sales, that have a lot of potential to make money in the future and invest in them. Okay, so I wanted to show you this ETF tab. I want you to try to wrap your head around this real quick. You have the option when you start investing. You can just buy stocks, and that's fine. Great, a lot of people do it, and you can stock pick, and you can create a diversified portfolio. But by the way, if you do create a diversified portfolio, what I think you're gonna wanna do is watch the video that I made, which I have a link right here, about creating a diversified portfolio. Ask yourself, how many stocks should you own? Things like that, right? So watch that video and that's gonna help you out. So ETFs. An ETF is an important thing for you to know in this whole endeavor of investing. So I just clicked ETF, and now if we go in here, we're gonna look at one of the more popular ETFs, and that's called VOO. If this ever loads, apparently my internet is not working. Okay, so timeout. Let me get my internet going. Here we go, we're back. Sorry, I had an internet issue there. So we're back here on ETFs. Now, this is a very important thing I want to go over. There are ETFs that track the S&P 500, that track many different things. You'll learn this as you learn more about investing. So VOO is one of those ETFs. SPY is another one. So let's click on VOO. This is one of the most popular ETFs, and it's the Vanguard S&P 500 ETF. The first thing that is wrong with Robinhood is that it does not tell you the expense ratio of this ETF. Maybe it will if I look through, but I don't think it does. So remember that there's a very small charge for this ETF, but some ETFs have larger charges. And if you don't know the answer to like the question, how much is this charging you, that's not good. So, you know, make sure you do your research before you invest in the ETF. Try to figure out how much money it's going to charge. This charges like 0.05% if I remember correctly. It's like nothing, so don't worry about the fees on this. And it comes out of your return basically, so you don't have to shell out money or anything like that for this fee. It just comes out and you have a little less of a return after the fee comes out, so it's like automatic. Anyway, Vanguard S&P 500 ETF tracks the S&P 500. Now, what is the S&P 500? Guess what? I have a video on that. I'm gonna link it here. So if you want to watch that video, it'll help you understand what the S&P 500 is if you don't know. But the S&P 500 is the top largest 500 stocks in the United States. Based on market capitalization, and like we said with Starbucks market capitalization is around $80 billion. So it's a quite big company. But when you compare it to like a Microsoft, which is in the trillions, then it's not as big, but it's still definitely in the S&P 500. Now, when you get to smaller companies, maybe like less than 5 billion or less than a billion, those companies probably aren't gonna be in the S&P 500. So what I'm trying to tell you is that the S&P 500 is skewed towards the largest companies in the United States. There you go. And so if you invest in this ETF, it's the average of all those companies that are in this index of stocks, these 500 stocks. And so again, you can take a look at how it's done over the past 1 week, 1 month, 3 months, okay? There you go. You can see everything you want. You can see the stats. But the main thing I want you to know about this is, if you want to, you don't have to buy just 1 stock, 2 stocks, 5 stocks, 10 stocks. You can also incorporate an ETF, and it helps you with diversification. So as you learn more about diversification and not putting all your eggs in one basket, then you'll understand that having an ETF kind of is a way to maybe track what's going on with the market, but maybe not try to beat the market. So if you have an ETF, you can't beat the market because this does exactly what the stock market does, as in the S&P 500 index. So let's go back. Now let's say there's another thing I want to mention. It's called asset allocation. What is asset allocation? Asset allocation is how much stocks you have and how much bonds you have. Different asset classes, how they're allocated. If you have commodities, commodities is also an asset class. So how much you have of each of those is asset allocation. So let's say you have 90% stocks and 10% bonds. That's your asset allocation. And what's interesting here is that you can go ahead and you could say, if you want to take a risk profile and you want to go on the internet and you want to type in and answer some questions, which you can find on Google, just Google it, say you want to take a risk tolerance questionnaire, and it'll tell you how much you should have in stocks and bonds. So maybe if it says you want 20% in bonds, you can go to this bonds ETF, and then you can add 20% of your money into the bond ETF. Here's a BND, Vanguard Total Bond ETF. So you can put some money in here, and now you'll have some exposure to bonds. Then the 80% you'll put into stocks. Okay. Hopefully we understand that. So now let's go and go to this next thing real quick before we go back and I tell you how to kind of figure out how to invest and how many stocks to buy and ETFs and things like that. So just quickly, there's messages here. So any type of messages you end up getting, they're gonna be here. Self-explanatory. And on the bottom right is things about your account. Like I said, I just tried to link my account, so I'm waiting for that to happen. You have free stocks here if you want to hit that. You can invite friends, things like that. You can have your statements and your history and your settings and help if you need it. And so let's go back real quick. So what I want to do, I just really quickly want to help you understand what's going on in terms of how to find stocks to buy. And if you ever watched that video that I mentioned that I said I'll link here, actually I won't link it here, I'm gonna link it also at the end of the video. So understanding diversification. So there's a way to do this. So for example, you can buy 10 stocks and that's fine, great. Of course you can do it, and hopefully if you're starting out, you don't buy some of the wrong stocks. Hopefully you don't speculate too much and things like that. But you could also, instead of buying just 10 stocks and having 100% of your money in just a bunch of stocks that you pick, you could go and you could say, let's go to the VOO ETF. So when it comes to using an ETF, this is what I kind of want to get across. So, for example, an ETF can be a place where you put all your money. So you could put, let's say you have $1,000, and that's what we will use in our example here. You open up your Robinhood account, you put $1,000 in, that's how you fund it, and now you're saying to yourself, what do I buy? Okay, here's what you can do. One, you can put all your $1,000 into an ETF. that tracks the stock market. It could be the S&P 500 because that's the top 500 largest companies. You could also invest in an ETF that invests in the total stock market. So almost all of the stocks that are in the stock market. So there are different ETFs that you can invest in that basically average all of these different stocks. That's like a diversified portfolio of companies, okay? So you could do that. But your other option is you could go out and you can buy stocks. And that's fine too. So you can go and you can say, I want to buy 10 stocks, and you can go and you can do some research and you can try to find 10 stocks to buy. So maybe you want to buy Facebook, maybe you want to buy Home Depot, Starbucks, Google, whatever, okay? So you create your portfolio of stocks, and then now you have your stocks. So you can do one of those two things. ETF, which is very easy, you just buy 1 or 2 or something like that, or you try to buy 10 stocks and you do some research. Nothing wrong with either of those approaches. What if you do both? What if you say, I'm gonna put half of my money, let's say you have $1,000. What if you put 500 into an ETF that tracks the S&P 500, and then the other 500 you spread between 10 different stocks? So that's a great way to also go about it, and that's what I call a core and satellite portfolio, which again, I link at the end of this video, so if you wanna watch that video, you can. So anyway, you have the option of going out and buying your own stocks and trying to figure out what to do and how this whole thing works, or you can go and you can invest in just an ETF or different ETFs, and you can do that too. Again, remember, you want to keep your asset allocation correct. Maybe you do a risk tolerance profile that tells you if you should own bonds or not. So if you don't want to own bonds, all of your money's in stocks. That example we just went over, $500 in ETFs, 500 spread between stocks, that involves no bonds. But if you want bonds, maybe 10% of your money should be in bonds, maybe 100 of that $1,000 should be in bonds too. Okay? Hopefully that makes sense. That's how you can try to start figuring out how to buy stocks, how to buy ETFs, how to decide which one to buy, or if to do a blending of all of them together. Okay everyone, thanks so much for watching this. I really appreciate it. Now, if you like this video, please hit that like button. It really helps me. I mean, I know people say that and everything, but it helps the algorithm. It really helps me. I really do appreciate it. And if you subscribe, that's also great. I love seeing my subscriber count grow so that these new videos, whenever I put them out, can land in your inbox. So hopefully you like the video. Please, in the comments, let me know. Are you going to maybe do an ETF investing approach, a stock investing approach? Is there anything that I left out? Are there any questions you have? Just let me know. I want to hear from you in the comments section. Again, thanks everyone so much for watching, and hopefully you'll watch some of those other videos at the end of this, at the end screens. So until then, have a good day and see you next time.